Welcome to this quick start guide for getting your fixed asset set up in nettTracker. We'll start off with our basic settings, take a look at the depreciation options and depreciation rules, set up our asset groups and then map those to our chart of account categories in our accounting software, import our existing asset register values into nettTracker. Then we'll review the asset register and our asset summary balances and finish off by reviewing the asset information visible on the dashboard. Just before we get going, I wanted to remind you that within nettTracker, in the help menus, further resources are available, including a full-length tutorial. In the file I'm about to set up, the last financial year end was the 31st of December 2023, and looking at this simple balance sheet, I can see there are asset categories for computer equipment and motor vehicles. I'm going to create a new nettTracker company file, connect it to QuickBooks and make sure that the first financial year is set to begin from the 1st of January 2024. Logged into nettTracker, I'm currently at my organisation dashboard. From the top right hand corner, I'll select Account and then choose New Company. Next, I'll choose to connect to QuickBooks. I then select the QuickBooks company that I wish to connect to nettTracker and select Next. Review the company name, the currency that's in use, and check the first financial year settings and make changes where appropriate. After saving the initial settings, you will be directed to company settings. Now there's lots to choose from in here, and I'm going to direct you to the most important options. First of all, there is our financial year. I changed my dates to start from 1st of January and ending 31st of December during my initial setup process. The option to change the financial year is really to shorten or extend the year. Now, if you've made some mistakes actually getting started, it's advisable to go to your company options, where at the bottom you've got the ability to reset the company, and within the reset options you can actually change your beginning and end dates for your financial year. Next, our nominal accounts display all of the chart of account categories that have been brought through from your accounting software, which are available to be used by nettTracker. As we start to build our asset register settings, we'll be mapping our asset groups to our chart of accounts. Let's now move into those asset register settings. If we need to make any changes to the settings in place, we click on the pencil icon on the far right, and this will open up our settings. With depreciation methodology, we can choose between by month or in year. Selecting by month will mean that depreciation calculations start from the month in which an asset was purchased. If you use the in year option, depreciation will be calculated based on the first day of the financial year, regardless of when the asset was purchased. In this example, I'm going to select by month. However, you can select the depreciation start date at the point when an asset is added to the asset register. If we were to select daily within calculation resolution, depreciation will be based on the number of days in a month. For example, 28 days for February, 30 days for June. If you purchase an asset halfway through the month, you would have 15 days worth of depreciation in the first month. Reporting period simply calculates depreciation based on 12 months within the year. Condensed journals means that your accounting journal entries will be summarised. You can remove the tick to allow for more detailed journal entries. However, if you do have a lot of assets, that could lead to a journal entry with hundreds or maybe even thousands of lines. When it's time to mark an asset as disposed, if you were to use the same balance sheet account that you would have when you originally purchased the asset, We would suggest that you tick this box because that will make your account mapping process simpler. If you had a business that actually uses separate balance sheet accounts for disposals and depreciation in year, then you'd remove that tick and you could select to create year-end journal adjustments to ensure at the end of a financial year all of those accumulated balances are updated from the movements during the year. In this example, we're using the same balance sheet account for disposals as our costs. Now moving on, we're going to create our asset groups, and I've got two to create, one for motor vehicles and another for computer equipment. I start off giving my asset group a name. I can select a default depreciation rule for this asset group. If I don't see the depreciation rule that I need, we can create them from the depreciation rules area. You can add notes, but it's not mandatory. Now I move on to my general account mappings, where I need to map the balance sheet for tracking costs, the balance sheet account for our depreciation, and the profit and loss account for our depreciation. So starting off, I search for my account, which here is going to be vehicles, the balance sheet account, which here is accumulated depreciation, and the profit and loss account, which is depreciation expense. If I move down a little, I'm using the same balance sheet accounts for my disposals. It's defaulting to use the same profit and loss account, but I may wish to put a different one within here, which is going to be proceeds of sale from assets in this example. With my mappings in place, I can now save. I'll now repeat the process for computer equipment, selecting Create New Group, adding a name, a depreciation rule, selecting a balance sheet account for costs, for depreciation, a profit and loss account for depreciation. Further down, check my disposal mappings, just changing the account for gain and loss on disposal, and then saving. Below our asset groups and mappings, we do have settings for automation, so automatically creating your journals every month, automatically detecting new asset purchases. And then further down we have our depreciation rules. There are a number of rules already in place. Should you need to create further depreciation rules, you can do so by clicking on the plus icon towards the top right hand corner of the screen, creating a new depreciation rule and selecting the type of depreciation. Straight line over a number of years. It will always put the depreciation in monthly, so 7 years would give you 84 months. Or if it's not an equal number of years, you could specify the number of months. With the required settings in place, let's now take a look at importing our existing asset register details. We do this by selecting the Assets menu on the left hand side and then choosing the option to import assets. Towards the top left of the drop here box is an option to download the template. In the top section of the template, there is a list of instructions to help you. The fields that are highlighted in yellow are mandatory and you need to have information in place or the import will fail. So the minimum requirement is to have an asset group in place, depreciation method for each asset, the purchase date, a description, the original cost and the accumulated depreciation to date. In addition, you can have a salvage value, and if you are using class or location tracking, that information can be added also. If you are using classes, locations, tracking categories, cost centers or departments in your chosen accounting software, ensure that that setting is enabled first within your general company settings. With our template complete, we can choose to browse for the file or drag and drop the information. We can review the asset register for completeness In this example, I can see there are some spelling mistakes in the asset group. I'm going to change those, selecting that I have identified those problems, and now I'm going to choose the option to complete the import at the top. After importing, we're directed to the asset register. In this example, I'm looking at motor vehicles. I can swap to computer equipment. If we head to the asset register summary, we can see our two asset groups, motor vehicles, computer equipment, and a summary of the balances for each of those asset groups. If we take a look at the dashboard, you can access the dashboard from the left-hand menus. We can see in the asset register area that we've got the total cost of our assets displayed, total depreciation to date, giving us a total net book value. This should balance back to the total value of assets per the balance sheet from our accounting software, and here we've got a difference of 0. On the right hand side, the pie chart shows the value of the assets per each asset group. In this QuickBooks file, I've just added a supplier bill for a new vehicle. Back in nettTracker, I'm going to Transactions and I'm going to refresh. Now in Assets, I can see an additional transaction has come through, and I need to create an asset off of the back of that transaction. I can review the information, make changes where necessary. Here I am simply going to save. Looking at the menus on the left, I can see that I'm overdue closing my financial periods, but before I do that, I'm going to go to the assets area and look at the depreciation forecast. For motor vehicles, the asset I've just added is overdue its depreciation. I can go back to my period end and run the previous month again. That asset has now been brought up to date. If we head back to our dashboard, all of our values will be in line. This brings us to the end of this quick start tutorial to help setting up your fixed assets in nettTracker. For further guides and tutorials, go to their help menus towards the top right hand corner of your screen, where you'll find the knowledge base and a full-length tutorial. Thank you for watching.